Some people come into trading and they see money for what it is. And it's not something you work for. It's not something that you exchange your time for. It is simply a tool. That is all it is. And then there's 99% of other people who had to work for money, associate the value of that money with the time it took to create the money. And so they always have an emotional context of it. And because that emotional context is always there, they're always going to make mistakes. And you're never going to be that cutthroat great trader until you master your relationship with money.
Just a quick pause before we get into this. Trading can be intense, and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply. 1 for starting your day with calm intention, 1 to stay centered while you trade, and 1 to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description. Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today. Hey everybody, welcome back to Market Mamas. I am the host, Becky, and I absolutely thoroughly enjoy talking to other traders. Is my favorite activity in life these days because I get to learn about their journeys and compare to mine and figure out what helped them get to their most consistent period. And I think those conversations bring so much value because we can learn together from each other and help evolve and get to our most successful periods together. So today I am very pleased to welcome a very good friend and boss trader who has been around way longer than me, and I learn from literally every single time I speak to this man. I learn something. So you're welcome for coming, bringing him on my podcast so that we can learn together. Matt, thank you so much for joining me today.
It's an absolute pleasure to be with you here today. And thank you so much for even bringing me on Market Mamas. You know, when I first heard about your pod, I was like, I know it's Market Mamas, but I have to make an appearance like this. And so it's an absolute pleasure to be here and excited for the conversation today.
Thanks. Yeah, I definitely agree. We were like, we have to make this happen because it'll be great. And I honestly think that there's a lot of content on the market, out in the world about trading, and not all of it has, the same value. But I think when you talk to people who are really like in the trenches, have done this thing consistently for years, the value there is incredibly impactful because that experience is, you can't make that up. You can't create and speak to experience that you just don't have. And so let's get into that.
You really can't. And as somebody who's been around the block a time or two, especially in this industry, and I'll just be the first to admit, most of the stuff online is complete and utter garbage, and it's not going to make you a great trader. It's kind of like reading a book, Becky, where you can get some value from the book, but it's not going to teach you how to trade. You got to kind of get in the trenches, and you got to get with people who have been there, done that, kind of have the merit badges and the scars and so on and so forth. But there's certainly helpful information out there, but for the most part, I see it kind of taking people down the wrong path.
Yeah, I agree. And honestly, people ask me sometimes about what do I finally need to do to be consistent? What is the key? And the hard answer is experience. You just have to be, for me, that's my answer, is you have to be in the market. You have to trade it. You have to figure out what it feels like to lose and then dissect why and what you can do differently and what lessons you can learn from it, literally day in day, month after month, year after year. And then I think you get some sort of consistency after that, right?
Well, you got to show up. It's like, half a part of all of life and the success of life is not what you know and who you know. It's literally just showing up. And, it takes a lot of experience to sit down and process the data of the financial world and to navigate all the different news and the reports and the opinions and the, everything that comes at us on a day in, day out basis. And so it can be very overwhelming at times. There's no doubt about that. But that's why having like-minded individuals who help you understand the market and help you navigate the market, and finding a great community and finding podcasts like Market Mamas that you can indoctrinate yourself in over time, and trusted content from trusted people.
Yeah. Well, I want to pick your brain on all of the best words of wisdom you have. But first, let's tell them why I'm picking your brain. So you've been a trader, what, for like a year or two? Tell us how you got
Couple
started.
years, couple years. It's been, I meet a lot of traders and like, yeah, I started post pandemic. I'm like, yeah, I started pre subprime meltdown. They're like, what's the subprime meltdown? Oh yeah, that was 15 years ago.
When you were in
Yeah,
middle school.
I've been doing this for about 2 decades now. October of 2005 was the first time, and I'll always remember it, the first time I sat down and I made my first trade. And I was taking a class called Master Trader in October of '05. And I was just watching this guy by the name of Mike Batty, great trader, this old school dude from Utah, raised cattle, had a cowboy hat on. You would not think by looking at this man, he was a great technician, great trader, great everything. But that's what he was. He was a great trader, great technician, great everything, just a great overall dude. And I just remember just sitting down watching this guy who had probably had 20, 25 years in front of me talking about technical analysis and support and trends and patterns. I'm like, oh, I'm a smart guy. I can go do that. So I go out there and rip my first call option on a company called First Solar, and worked out pretty good. So I was like, oh, let's go rip that second trade. So I went out and I bought some more call options on, I believe it was Schlumberger. And then I was like, oh my goodness, that one worked out really well. So I was like, oh, let's go out there and let's put it all the business on that third trade. I'm like, I was a genius on the first two, and the third trade taught me some very valuable lessons. But no, it's been about 20, 21 years now.
Dang.
A little over 20.
Well done. That's amazing. And I love how you're like, I was great. I learned I was going to be a killer trader. And then all of a sudden you
I
were
was out of the rat
punching face?
race in 2 weeks there. Oh yeah.
Yeah. Mine, when I first started trading live futures, I was really profitable my first week. And I remember that Friday night, I went to my best friend's house and we were sipping on her patio. And I was like, I'm going to be like a millionaire by Christmas. I'm sorry. I'm so cool. Like, what are you going to do?
Yeah, look at me,
And
look
the
at me,
next
look at
week,
me. And it doesn't work out that easy and that quick. And sometimes I kind of feel like, as a new trader, taking a loss is probably a little bit better for your journey than getting a big hit and thinking you're going to go to the moon in the next 4 days with Elon Musk. And so have a little perspective when you first start trading. But at the end of the day, trading's amazing. Love investing, love trading, love everything about the markets. And I think what those first 3 trades taught me was it had nothing to do with the money, to be perfectly honest with you. It had everything to do with the fact that I knew I could read a chart, and I knew I was making a lot of mistakes. Like I knew those 2 things. I knew I could read a chart because technical analysis, just came really, really easy. And I don't want to say technical analysis is easy. There's things that come easy to people and there's things that come difficult to people. Technical analysis was one of those things that just came very, very natural to me. And so I knew I could read a chart. I knew I could study trends and patterns and support and resistance. And I could listen to my coaches and mentors. But I those first 3 trades taught me that I was not smart, that the market was smarter than me, and that it was up to me to really get the understanding and the knowledge necessary to navigate the financial world. And the biggest mistake I made, honestly, was position sizing. That was by far the biggest mistake I made early on. And so you cut that out and you have a little bit of a better perspective on what you can do in the short term and what you can do in the long term. And you start taking action to get there.
yeah. Would you say that it's an issue with early traders that over leveraging early? Because I definitely think when you don't understand position size and what it means to like risk all of your account, like trying to get a home run, like the allure of it is so appealing when you're young and you don't have a large account. But gosh, it really is dangerous because you can have decent base hits for weeks and then just wipe all that out by getting overconfidence and throwing everything at it.
Well, and that confidence leads you to taking some really, really stupid things, quite frankly. And that means basically what I'm saying there is taking undue risk is what I'm talking about there, and putting too much capital at risk and putting too much capital to work in too few trades. Trading, and again, going back to those first 3 trades, trading is about probability. And when you put one, like, let's say you're a new trader and you have $5,000 in your account, and you go out there and you rip some call options on a short-term trade and you have 80% of your account allocated in that short-term trade. Yes, that one trade may or may not work out. That's random. It may or may not work out. But if you do that thing 10 consecutive times and you act like that 10 consecutive times, you are guaranteed to lose in the financial world. You have zero probability. And so those first 3 trades, I was putting 60, 70, 80% of my account in because I had a very low account. I was just starting out. And I was putting the vast majority of my account in that one trade, and it worked out. And it's like, man, I'm amazing, right? And then you do it again. You're like, oh my goodness, ooh, baby, ooh, yeah, look at me, look at me, look at me. And then you do it a third time, and you're like, oh, I'm the dumbest man in America. Like that's the roller coaster of emotions you have, and it has nothing to do with anything other than you just don't understand one very, very, very key concept, and that's called the risk of ruin, which states if you put more than 4% of your capital at risk in a leveraged position, you're not going to be a trader long term. And so if you're looking at your first year of trading and you're like, it's a lot of random up, a little random down, I'm really kind of struggling with consistency, I'd say number one, let's look at your position size. Number two, let's look at your risk parameters. And then let's talk about your entry and your target and your stop loss and all of that jazz. But a lot of the early mistakes I personally made, and I think a lot of traders make, is they simply put too many of their eggs in one basket. And when that one basket doesn't come through, they have a tendency to say, trading's gambling. No, you treated it like a degenerate gambler, not the other way around.
Yeah. Yeah, I love that you said earlier that you love trading the opportunity of the markets and stuff, because I feel the same way. But there was definitely periods early on when I was humbled hard by the losses. And I think in that situation, you have to shift. You have to learn to recognize that the market is abundant and it's not out to get you. What you have to do is own your own accountability as a trader. Like, you are the one who chooses the size you trade, the instrument you trade, the time frame you trade, the way that you execute, the way that you manage your risk. And so it's on you. It's the market is going to do what she's going to do, and your job is to study and then figure out your system and then actually honor it. And in that way, the market is truly an abundant, fruitful ground of like the biggest money making opportunities. But it has to come with like respect and personal accountability.
Well, I would certainly agree with that. I mean, what you're talking about is, obviously that personal accountability, but that's kind of what we love about trading, right? That's why people like yourself and mine and thousands and thousands and thousands of others gravitate and want the financial world, because they know it can provide the type of control that they desire in their life. And that's what it really comes down to, is we all want that degree of control. But not everybody wants to go through let's just say, crawl through hell to get there. And that's kind of what really kind of learning very early on in the financial world is all about, is you don't know everything yet. You don't understand everything yet. You might have an understanding of a trend, a pattern, a support, resistance, and even be able to go out there and make a trade. But it's very hard for new traders to put it all together. And that's why you really got to be cautious at first. You don't know everything, even if you think you do, even if you think you've read all the books and you've studied all the YouTube videos and you went to all the classes. I promise you don't know everything until you start putting it into action. And I think about, great traders of the past, Becky, where you think about people like, Charles Dow and Wyckoff and Livermore and Elliott and Gann and those, amazing, amazing traders and educators of the past. But I'm thinking about like Richard Dennis, who was a self-made trader who didn't understand a lick about trading, was never taught how to trade, just wanted to learn how to trade. And in the late 70s, went down and on a piece of paper for years would write down entry, stop, target, modify, entry, stop, target, modify. Practiced for like 4 years before he went out there and made that first live trade. And yes, he went on to turn $10,000 into like $200 million and became absolutely one of the great traders of all time, became one of the great stories of all time with the turtle traders. But you know what? It took him 4 years to really kind of work on his system. It took him 4 years of backtesting and study and effort and case studies and saying, oh, I did this right, I did this wrong, I'm modifying. And yet I find a lot of traders, when I think about Charles Dow, Wyckoff, Livermore, Elliott, when I think about Warren Buffett, the great investors of the world, when I think about Peter Toole, when I think about all these great investors and traders, none of them went out there in their first year and became that great trader in their first year. None of them became that ultimate icon in their first 5 years. I think about Jack Swagger, who wrote the great book, the New Market Wizards, where he went out there and he interviewed all these amazing traders, these so-called self-made traders, which none of them were so-called self-made. They all had help, they all had coaching, they all had mentorship, they all had community, they all had team, but they all had time. And that's the number one thing that I would recommend, and the advice I would give to somebody in their first 6 months or a year. If you're not getting this, second oldest profession of all time, mind you, if you're not getting this in your first 6 months to a year, well, welcome to the club. Welcome to the club. You're in that same club with Dow and Wyckoff and Livermore and Buffett and Elliott and Richard Dennis and Becky and Coach Mack. You're in the club because you're not supposed to get everything in your first year. Your first year is really about proving to yourself you have the discipline, you have the skill and the discipline to be able to do this. And so you got to give yourself a little bit of time. And that's what, honestly, coming from somebody who's been there for 20 years doing this, that's what my first year taught me.
Yeah. That's part of my very favorite of learning about traders that have made their millions is like, what did that look like? Like, how did they figure it out? How did they become this trader? Because that's where I'm at, is becoming this trader that I want to be down the line. And every single time I've dug into those backstories, it's like, it sucked. They had big losses. They felt like an idiot in such and such settings. And then they dug into their mentors and their system, and they refined this, and they created the way that they come about trading. And it's different for all of them. It's different for all of them, their technical approach and their trading strategy. But the thing that's consistent is that they did persevere through the times of failure, and they survived years of early struggle, which is exactly to your point. Like, you have to survive that in order to achieve the other side of that.
Without failure, how do you have success? How do you even define success unless you have failure? And so every great trader, every great businessman, every great politician, every great economist will all say the same thing. You fell up. You have to go through failure to not just to learn what you did wrong, but to learn how to accept and deal with failure. People fear failure. You shouldn't fear failure. When you fear failure, you're fearing action. You're fearing knowledge. You're fearing learning. You're fearing progress. You're fearing evolution. You're fearing all of these things that are really, really, really beneficial to you. And so that ultimate fear holds people back from doing the things they need to do so they can get to the other end. You know, I think I keep coming back to some of the greats, but the greats are in my head as we kind of navigate the conclusion of this year. And I think about Warren Buffett. One of my favorite quotes of all time is, all types of things can happen. The end of the United States dollar as a reserve currency, a bear market, hyperinflation, whatever the fear is economically out there, which in our world right now is there's a tremendous amount of anxiety and paranoia and fear about what happens next economically, what happens in the AI age, what happens to the labor market. And that's what I think always hear Warren Buffett in my head when I'm going through those same questions about what happens to our society, what happens to our economic system, what happens to America, when I'm thinking about all these things, right? And old Warren Buffett said many years ago, knowledge is the new currency. And if you have knowledge, it doesn't matter what happens out there. You always have the number one asset, which is you.
Yeah. Warren Buffett is such a leader in that example of studying, reading. He is one of the biggest readers that I know when I look into traders' backstories of. He will read just in the privacy of his own space for hours every day whilst building a tremendous business. He still prioritized getting the data from the companies that he wanted to trade, from deep dives into their work, but then also strategy and understanding everything about what he was trying to do. He wanted all of that knowledge, which made him an incredible powerhouse. Well, like just that right there.
Think about his early story, before he made his millions. People look at when we talk about the great traders, and when traders look at these people, right, they see a finished product to a certain extent. They don't realize that Warren Buffett from the age of 20 to 50 had some ups and had some downs. And it really took Buffett, the greatest investor of all time, mind you, up until the age of 50 before he made his first $1 million. Up until the age of 50.
People don't know that.
He didn't make it at 22. He made his first transaction at 13, mind you, 13.
Yeah.
And he didn't make his first million until he was the age of 50. And you talked about Warren Buffett's thirst for knowledge, which has obviously been a staple of Warren Buffett. And knowledge is the new currency, is what his philosophy is. Well, who was his mentor? Because Warren Buffett didn't learn this on his own. His mentor was Benjamin Graham, who wrote the book, The Intelligent Investor. And if you've ever read The Intelligent Investor, you know how much data and detail and whatnot, because I'm a technician. That's what I am. I'm more of the Dow, Wyckoff, Livermore, Elliott mentality. I'm a technician, but I have that investor philosophy through Warren Buffett. But Warren Buffett, it took him about 37 years from the time he made his first transaction to the time he made his first $1 million. 37 years. And probably thousands upon thousands of different transactions. Give yourself some time is my whole point. Life can be long. It sometimes feels short, but it can be long. You have time. Don't think you need to find every aspect of your success in your first year of trading.
Okay. So answer this how you will, but I want to poke at your early story. Beyond those first 3 trades, tell me about your first 3 years as a trader.
You know, I was taught in the late stage bull run of the subprime market, where I came in 2005 and I kind of just danced a little bit in 2006. I started taking a little bit more seriously in 2007. And where I really started taking, like, seeing myself as not just, because I have other interests as well, but I saw myself more as a trader, was kind of that mid 2007 to 2008. And it was the early beginnings, the early innings of the subprime meltdown. And I'll remember, basically, it's where I embraced the philosophy in my second to third year as being a top-down analyst. And because in 2007, I was tracking the reversal in the S&P 500. And I can give you every pivot point, every detailed data point of that 2007 to 2008 reversal. I felt it was one of the greatest and best reversals we've ever seen. It was clean at support. It was clean at resistance. It had momentum. I mean, when you write the book called The Art of the Reversal and you have slowing momentum, double top, double bottom, a short porch to resistance, a violation of support, and then a kiss of death, and that all happened in a 6-month time frame on the S&P 500 weekly chart, like, I was excited. I was like, yes, we're going to go out there and we're going to cut our teeth on this bear market. And that's where I really started taking it serious, was kind of the 2007, 2008 bear market. And, you know, I felt like, I think the number one thing that taught me was, if you can get the top of the market right, everything else gets a lot easier. There's this philosophy in as the top-down analyst, and that's kind of how I see myself, how I approach the market, is from top-down: market, sector, industry, individual stock. Whereas I think a lot of new traders get that mistake. They think stock first, and it's like, no, there's a big pond out there. There's a big picture out there you need to get to. And if you get the market right, meaning you get the direction of the market right, well, the tradable side of it gets a little bit easier. And so it was really kind of the 2007, 2008 market, where we were dealing with a lot of up and down, a lot of volatility, a lot of concern. And then I felt like I had tunnel vision on, Becky. I could see everything just right in front. Like, I saw the trends, the patterns. I saw where the next move was. I felt like we were going down. I felt like there was the break was happening, and it wasn't from a fundamental perspective. It wasn't from a economic perspective. It wasn't from, because I honestly, looking back, I have a lot of interest in economics and economic theory and economic analysis, and I do a tremendous amount of that right now. But back then, I don't feel like, looking back, I don't feel like I understood that much, truly, about every aspect of the U.S. economy. And from a theory to an application perspective, I was just trying to figure out, honestly, not who the central bank was, but what was their role in everything. Yeah. And so to me, it's like, okay, I finally saw it through that market lens of top down. Get the top of the market right. If you can get the direction of the top of the market right, everything else you're trading gets a little bit easier. Because there's this theory in the market called the rising tide theory. And basically that states that as the market goes up, it raises all the bulls, and the bulls are the stocks. Well, for a new trader who just comes in and just wants to look at the stocks, 50 to 70% of all individual stock movement is based on what the market does and what the individual sector does. And so if you get the market right, a lot of that stocks gets right as well. And what I felt like going into kind of later stage of 07, going into 08, was the market was topping out. And that's where I was like, okay, it's time to start embracing a little bit more of the short side, because I grew up as a trader, as a bull. That's like I learned in a bull market.
Mm-hmm.
And so I don't think you really know who you are as a trader until you trade bear. That teaches you who you are far faster than trading as a bull. Because when you first, and this is kind of that timing mistake, not mistake, because you don't get to pick that. You find it when you find it. But I found the market in a bullish market. Other people find the market in a bearish market. But when you find the market in a bull market and you start learning how to trade in a bull market, everything, it gives you a bad mentality, in my opinion, because you have a tendency to be successful initially when you're in the middle of a bull run and you're learning how to
buy flies.
Like literally 90% of everybody's making money. And so you're just part of everybody making money. You're not different. You're not better. You're not worse. You're part of everybody else. You're part of Mr. Market. Market's going up, you're making money. Market's going down, are you making money? Because that's what's going to prove it if you're a real trader.
Right. And I think a ton of traders will get washed out at that period because they won't be able to let go of their bias of like, we're buying. Everything I do, all the money I've made is from buying. So I'm just going to keep buying. I'm going to dollar cost average. I'm going to ride this. Of course, there's a bottom. We're in a bull market.
And they probably don't even know what dollar cost averaging is yet, but they're going to say it, right? Yeah.
Okay, this is why I love asking all experienced traders about the early years, because you just dropped so many gems that I don't even know if you dropped, but you learn patterns in your early phase by trading them. Like you spoke to, like you were looking at the weekly chart when you were a trader for 2 or 3 years, and you were seeing those patterns, and you are excellent with pattern analysis and understanding, because I've heard you speak to them many times. And like, what a key opportunity to be there at that time when you saw a critical pattern setting up. You spoke to several of them that presented that you could see if you're looking for them. And I think a part of that is what you have to be open to receive from the market. You have to be open and unbiased and being able to say, are we still rising, or is this a resistance that we're hitting? So like, to not hold to a bias and instead consider all the options and let it tell you, let it set up and be more fluid. Be willing to accept the risk of stopping your longs when there's a potential setup that's showing you that there might be a reversal at play. And like that being present, like that, you killed it, because having that presence of mind to be able to catch a reversal at 2 or 3 points in, 2 or 3 years into a trading career, is not everyone can have that fluidity with staying present with the market, which I think if I could say anyone who is an early trader who is still struggling, like if you can cut your bias and stay fluid and open and consider what it would look like to continue bullish and consider what it would look like for this to be a bearish opportunity, that sets you up for so much more potential of learning and growing, because you're assimilating the data instead of trying to force your plan on the market.
I think some of the best traders obviously have a plan, but like the best coaches in NFL history, if it's not going according to plan, you have to make modifications. You have to make adjustments. And you mentioned patterns. You know, I think of the dude from The Big Short when he made his famous short against the Subprime Meltdown. And if you haven't watched that movie, anybody listening, definitely do. It's a fantastic movie. Christian Bale's absolutely fantastic. Steve Carell. I mean, the whole cast is amazing. It's a good one when it comes to Wall Street. But he made that short based on fundamental analysis. He made that short based on the reading of the subprime meltdown and seeing how banks were leveraging debt upon debt upon debt. And basically he took a leverage position against the market based on a fundamental purview of the housing crisis that was not necessarily going on at the time. But when he saw the data, he's like, this cannot work out. That, to me, early on, made no sense, like none. Like I had no clue. Like I knew what a PE ratio was. I knew what a PEG ratio was. I knew how to assess valuation at the time, but that's about it. But the one thing that always came easy, and I don't want to say easy because trading's not easy. And I don't want anybody to think that trading is easy because trading's really hard up here. Like it's really hard up here. And it can be really hard down here. When you overthink things and you start feeling things, it can be really difficult. But your eyes don't lie. Your heart's going to lie to you. It's going to tell you all these lies to you all the time. Either, they like you, they love you, they hate you, they don't. It's going to tell you lies all the time. Your brain, you're going to overthink absolutely everything. Your eyes read. And when you have a good read on something, trust those eyes. And I always felt like patterns played out. Like I felt like I always had an understanding of those patterns in the market, whether they were bullish continuation, bearish continuation, reversal formations, momentum-based patterns, loss of momentum-based patterns. That's where I felt like, yeah, the Wall Street might have an edge on the fundamental side of the equation. Wall Street doesn't have an edge on the technical side. And so early on, I felt like really focusing on mastering the concept of technical analysis, mastering the one truth of the market. And I do mean that. There's only one truth of the market, and that's what people buy and sell in the market, supply and demand. Wyckoff said it, supply and demand drive price. That is the truth of the market. Price goes up. We can debate till the cows come home the reason for price going up, but it's going up because there's more demand than supply. That's number one. Price going down, we can debate till the cows come home why price is going down, but price is going down because there's more supply and demand. It doesn't matter the equation. Focus on the price. Price tells truth. End of sentence. I say it all the time at Tackle. I say almost every day. Price is king, queen, and country. Price is everything. You master price, you're going to be a great trader for a very long time. Because if you can master your price, we got a lot of time to master this up here. Because you are not going to master this up here in your first year.
No. And I love what you said about how patterns were easy because, okay, so every person is different. Our makeup is different. Who we are when we come to trading is different. How our brains function, what we see first is different. And so I think that every trader that I have met, something in this world has come easy to them. Some aspect of it speaks to their brain and what they see and why they're drawn in. And there's going to be an opposite to that, right? An opposite end of that where something is really hard and something is the reason why you could consider quitting. And so in trading, as you get deeper into your journey, you're going to realize I'm really good over here. Why am I not always winning? Well, let that be great and figure out what your issue is, what is holding you back, what you're struggling with that has to be like sorted out and grown through. Because if you can figure out where your shortcoming is and target that for specific improvement, mentorship, focus, a plan to manage it, that's how you can bring it all together. Because something is going to be easy for you or you wouldn't be in this game. If every aspect of it was hard, you would get the frick out way sooner. So figure out where
there are easier ways to make money in the world. There are. I know that's weird to say to non-traders out there because what do you mean? We can just go buy some call options to make some money. Well, you can one time do it over time, and that makes you a trader. But I love what you just said in terms of kind of the genetic makeup of all of us different traders. Yes, patterns came easy to me at first. Yes, and patterns have always came easy to me. I literally see them when I sleep. Like, that's not a joke. I do.
Yeah,
I dream about patterns. As a technician, I'm sure you have as well.
Yeah.
We kind of think about it a lot. It dominates our mind. But that doesn't mean trading is easy, right? And my first 2 years wasn't easy. Honestly, looking back, the hardest part was trying to understand who I was, trying to understand me, trying to understand my consistency, trying to understand the things that held me back from being consistent, because I think that's the number one thing looking back that I wish I would have done a lot better is the consistency. Because again, getting excited to go make a trade is one thing. Doing your job when you're not excited is a vastly different thing. And it's really exciting when you're in your first month, 2, 3, 4, 5, 6 months of trading. You're learning an entire new world. Like literally, your mind will be opened up to things you never knew existed, including quite a bit of conspiracy theories. So just get ready for that. The world of finance will open your mind to what the banks do. There's no doubt about that. But it doesn't mean it's easy. It's not easy. And the hardest part is honestly mastering yourself, mastering your emotions over money. because at the end of the day, we are all born in this country, and most people around the world are born as a consumer. And we're taught how to buy things. We're taught how to work for money, and we're taught how to save that money. Going into the age of AI and inflationary environment, not exactly the best decision. We'll talk about that next podcast. But for now, it's really understanding your relationship to money. Some people come into trading and they see money for what it is. And it's not something you work for. It's not something that you exchange your time for. It is simply a tool. That is all it is. And then there's 99% of other people who had to work for money, associate the value of that money with the time it took to create the money. And so they always have an emotional context of it. And because that emotional context is always there, they're always going to make mistakes. And you're never going to be that cutthroat great trader until you master your relationship with money.
That is so true, and such an important topic that people, I think, don't even think that they have to figure out, because like you said, it's born into us. We never thought about creating a money mindset that was any sort of like abundance and the way money can work for you and the way your time.
Save. That's what we were all taught.
Yeah.
And it didn't work.
Have to work. Yeah, you have to work, and then you get a limited amount of money, and then you have to provide XYZ, and that's where your money goes. And then you better get your butt back to work on Monday morning. Otherwise, you're not going to be able to buy your food on Friday.
Right? There's got to be a different way than just the thought of working for money and associating your time value with the value of money. Those are two completely different things. Your time, Becky, has tremendous value. You have tremendous value. Everybody listening to this podcast has tremendous value, unlimited potential, unlimited value. There is no doubt about that. But the mistake is we associate that value with how much time it takes for us to extend that time value with how much money it creates. And then we associate the value of the money with how much time it took us. And so, for example, you take somebody who works a minimum wage job, right? They'll look at $100 risk in the market and they'll be like, oh my goodness, I can't do that. And it has nothing to do with the money. It's $100. It has nothing to do with the money. It has everything to do with the fact that it takes that individual on average working about 10, 12 hours to make that $100. And so it's not about the $100 of risk. It's about, in the back of their mind, they're thinking, that's going to take me 10 hours of my time. I'm going to have to go to that job I hate for 10 hours just to offset that. And now take that mindset with those weights we put on us and then go out there and be your best trader. That's going to be very, very difficult. It has nothing to do with your entry. It has nothing to do with your targeting. It has nothing to do with your stop loss placement. It has nothing to do with the trade. It has everything to do with your relationship to money in general. And that is what we have to master. And when you can get to the point where you see money as nothing but a tool used to acquire things, that's where you want to get. Now, is that going to happen in your first year? Not for a working age human being. No, and it certainly wasn't for me. It probably wasn't for you. I don't want to put words in your mouth, but I doubt it was for you. And I doubt it was for the listeners of this podcast either, because we're all the same. Yeah, you might be unique and I might be unique in the things that I like, but we're all human beings with the exact same behavioral analysis to us. And that's something that we have to focus on in the first year to two. You know, I was working with the coaching student of mine just this previous Tuesday, and we're breaking down some of their swing trades. And they're like, I can't, figure this out. Something's going wrong. Like I get my entry right, and then all of a sudden I'm not making the money. And I'm like, let's evaluate it. Let's sit down and let's go through the process of breaking it down step by step by step. Where's your entry? Where's your stop? Where's your position size? Where's your targeting? And you know what we found? That in his frustration, we went through about 20 to 30 trades. And in his frustration, he was very frustrated that he was just like, I just can't get it. I can't get it. I can't get it. It's not working out. The only flaw he had was a little bit of a problem on targeting mechanisms. He wasn't associating his T1 target the way he should. He was doing pretty decent on his T2 target. Entries were pristine. Stop loss was pristine. He's putting a little too much risk into the trade, and he had a mistake at T1. We fixed it, taught him what the issue was, and I haven't had a chance to see his next batch of trades because this was literally just 4 days ago. I'll meet with him next week. But I'm willing to bet, because I've done this a few different times, that he makes a substantial leap forward in his understanding of the application of trading. And so it takes time, and you should give yourself that time to understand this. I've always said, if you're profitable after your first year of trading, fantastic. If you're still in this game after your first year of trading, beautiful. Beautiful. It's not about get rich quick. If you approach this market with the get rich quick mindset, you'll get poorer faster than you will ever know, because there's cutthroat traders who do not treat this business as a get rich quick mentality, that treat this with the seriousness that it deserves. And if you're not willing to put in that degree of, I'm not saying time, because trading doesn't take a lot of time, but the seriousness, treat it like a business, because if you don't, other people who are will make you a victim to that market.
Yeah, they'll take your liquidity all day.
Every day. In fact, not only will we take it, we will say thank you for providing it. Yeah. It's like somebody has to.
Somebody has to, and a lot of people do. And that's such a good example of your coaching situation, because when you're really frustrated and something isn't working out, it's much easier to slide into the, oh, what is going on? Like, you're so mad, and like, again, another one's not working. But when you can like take a deep breath, consult a mentor, and then like drill into the data, a lot of times if you can pull out of that emotional side of it and just focus on the numbers and like, this was good, this was weird, this didn't work, why didn't this work? But then you get into that's the work in my mind of trading, is journaling everything, analyzing your journals and your trades, and then tweaking the little issues instead of strategy hopping and getting frustrated and binging on some BS or over leveraging or whatever.
Hopping is funny. Like, let me switch from delta to theta to vega to gamma. Let's go through it all. Let's hit all the option Greeks in the next 48 hours.
4 trades lost. That's it. I'm going to YouTube and I'm going to figure out another
cash flow didn't work. Let's go to scalping. Scalping didn't work. Let's go to swing trade. Like give yourself the patience to know this is going to take some time. And the first year of trading is really about learning who you are, what style of trader you are, what style of trading you like, what are your risk parameters. You know how many times I've met people that come in being like, oh yeah, I'm a risk taker. Let's go. I like jumping out of airplanes and skydiving and all of this jazz, right? And I'm like, okay. Let's go trade some futures. 3 seconds later, after losing $75 total, they're like, I can't take this. This is too much. I'm like, so you're not that much of a risk taker necessarily, then. I'll tell you, the market will teach you how big of a risk taker you are very, very quickly. But, we all make these mistakes, putting too much money in a trade, getting, patting ourselves on the back when we get 3 or 4 or 5 good trades, or telling us we're the worst trader in the history of mankind when we lose 3 or 4 or 5 trades in a row, when the reality might be has nothing to do with you. And I know that's the answer people don't want to hear, because it's always about them. But sometimes if the market's breaking out, Becky, and you're buying that breakout, and then the market fakes out, you just took 3, 4, 5 losses in a row. And it had nothing to do with you. The market broke out, faked out. Bad news hit. Sometimes it's just the market. Sometimes it's you. Sometimes it's something else. That's why team, community, coaching, mentoring, surrounding yourself with a bunch of other cutthroat traders is always kind of the end goal here.
Yeah. And that's how we met. We both do some coaching at BluSky Prop Funding Company. And honestly, like, that's why I wanted to have you on the podcast, Market Mamas, because like talking to people who will live this game, who have been through this period of like, I really wasn't good, and this is how I learned, and this is how I grew. And like, someone will say like, I'm frustrated on XYZ, and be like, yeah, I've been in that frustration point several times. Try this, consider this, let's talk about this. And having that community around you and the people to bounce it off of is like game changer. Like, I think community and mentorship is a game changer in trading. If you just think that you can learn this and be a master by YouTubing it and doing it alone on your device, I'm sorry, that's going to suck, and you're going to lose your savings, homeboy, because like you need to surround yourself with people who get it, who you can bounce ideas off and feel like this journey is survivable. And then that's how you can really start to grow.
I think I have about 1,500 videos on YouTube about a lot of different technical topics, fundamental topics. And I think you can learn a lot from YouTube channels. There's a lot of good YouTube channels out there. Market Mom is a great podcast. I have mine called Trading Justice. Again, all great resources. you can't really truly learn to trade solely. And that's the key word, solely, based on that. The same concept is books. Like, I love reading books. Like, my heroes in the financial world are people like Charles Dow of Dow theory, and Wyckoff, who was behind accumulation and distribution cycles, and really, really kind of influenced me through pay ranges and the ranges based on behavioral analysis. Really gave me that, really taught me how to see behavioral analysis in technical analysis, not just price, but the causation behind price. That's Wyckoff. Elliott taught me there was a rhythm to it all. It wasn't random, that these trends that Charles Dow, prosticated about, and, the pay ranges and the behavioral analysis that Wyckoff, Elliott taught me there was structure and rhythm behind that. Livermore taught me how to be a cutthroat trader in navigating what Dow, Wyckoff, and Elliott put out there. And so I love reading about these greats because we can learn from them. In fact, all four of those still dominate. Even if you don't talk about it, I promise you, the analysis you're listening to, the epicenter is in one of those four. And so I love reading about them. I love reading books. I love the New Market Wizards. I love podcasts. I love YouTube channels. You can learn a lot from all of it, but you can't learn how to be a cutthroat trader.
Yeah.
It can enhance your skill set. But at the end of the day, your skill set comes from sitting your butt in the seat and going out there and doing your job. And the more people that you have around you, coaches, mentors, community, the more people that have been there, done that, and care for you, truly do care for you, you will have the ability to now understand all of it, put it together in a well-oiled trading plan specifically for you, and give yourself the time necessary to make sure that you understand all of it. And so, yeah, podcasts, YouTube channels, books, all of it is great. It doesn't equate to you sitting your butt in that seat and going out there and doing the job of trading.
I literally on Market Mamas have a series called Must Read Recommendations because same, like my fundamental in trading is from consuming content, from books, from coaches, from podcasts. Like you have been a coach and a content creator all around the lessons of trading for many years. And I really thoroughly enjoy your videos. And I'm much newer to this game in terms of coaching and content creation. But the moral of it is exactly what you said. Like,
new to this game, Becky. It doesn't come across that way. You have amazing content in your own right. I've seen you put on that Psychology of Trading webinar enough. I sit back. I'm not kidding, Becky. I sit back as a consumer in your psychology webinar that you do every Tuesday for BluSky. I just sit back and I listen to you as a consumer. Just listen. Okay, what can I take away from that? Yeah, I've been here since 2005. What can I take away from what you are bringing to the table? You're well thought out. You put time into kind of your messaging, and you have an impactful moment for me every single week. Literally every single week, I take away something and I'm like, okay, this makes some sense to me. Let me go impart this same wisdom on somebody else over here. And that's how we truly do change society, is not going out there and doing something massive and big and on a scale that is unheard of. It's little things over time. And I'm going to tell you right now, I cannot be more impressed by what you do every single Tuesday in that Psychology of Trading webinar. Your mindset and how much you have studied. Yeah, you might say you only have a few years in this game. That knowledge level is a deep Warren Buffett level. And so, yeah, years is only one thing, only one part of the equation when it comes to experience is the amount of years in that. You, my friend, you are up there. So I don't want you to sell yourself short here. You're amazing in your own right. And that Psychology Trading webinar is one of my favorites every week.
That is very generous of you. You were talking about your skill with trading and patterns and stuff. And that, for me, the intuition and the psychology of trading is what spoke to me early on. And that's where I put my energy. And that's where I was like, why am I feeling this way? Like, what is going on in me? Like, this is supposed to be technical. What's happening with my body? Like, why can't I just trade the freaking pattern that I have studied? And so for me, that's where I went deep into like, I have to understand the psychology because this is how I'm holding myself back.
There's a
And so
behavioral
I,
element to it. Yeah.
huh?
There's a behavioral element to it. And there's something in your DNA, there's something in my DNA, that holds us back, right? And so with your focus there, you're like, I'm going to understand this because if I can perfect this for myself, not only will it help myself out, but I can help others too.
Yeah.
And that's the number one thing I love about community is as we improve ourselves and we get better. It's kind of like the rising tide theory. Your community gets better over time too.
Yes, share what you have learned. And that is, I wholeheartedly believe that. And like getting people around you that are real and will say, like, I also did this and it sucked. And so this is what I did to pull out of this phase. Maybe it will work for you. Let's talk about like what's going on with that. And I think, really lean into those people when you find them because there's so much power there and being able to kick it around real conversation, open, authentic, like what can help us get past this. Because that is how you, in my experience, that's how you can go from unprofitable to gaining some consistency and then gaining some traction and then knowing what helped you pivot there and then leaning into the behavioral choices, the trade system choices that you made that help the pivot, and then you can strengthen them and recognize that this is not weeks, this is months to years. And I think having respect for the longevity of the game will create your journey over time where in your 50s you can have your vacation home and your dream car and yada yada yada, but don't push too fast too early to get that by year 2 because that will add more stress than you need.
There's an old saying, I don't know who came up with it at first, but people overestimate what they can do in the short term. And the biggest problem is they underestimate what they can do in the long term.
Yes, I love that phrase.
Don't mess up your long term because you put too great of emphasis on the short. Always, I've said this for a very long time. If the long term's dialed in, the short term gets easier.
Seeing the forest through the trees. If you fixate on this one tree is stupid and it's my way and I don't know how I'm going to get around this one tree, like, look at the forest. Like, you're fine.
Yeah, you're missing the beauty. You're missing the bigger picture. You're missing the horizon. You're missing the journey. You're missing the goal. And you're fixating on just what you're doing right now. Well, every little action you take right now, the cumulative actions that you take from this point to that will determine where you're at 50.
And you can enjoy trading more by enjoying the little moments, the little wins. And even on the hard days, recognize that this day is going to teach me and I'm going to be stronger down the line for it. So just breathe, let the lesson come, take your licks, let your experience grow from this, and recognize this is still a beautiful day, even if it's a lesson day, because your long-term goal as a trader is going to be a beautiful journey over time. Just let it be.
I think one skill set that people learn over time is to know when to walk away. There's a time to trade and there's a time to go fishing. And some of the best trades I've ever made were those times where I said, I'm going to trade something else other than in the financial world. I'm going to trade my time to go not catch fish because I am a terrible fisherman, but I do like to throw that reel in. And so sometimes the market's not giving you what you want. Listen, the markets, you're not going to be able to force your willpower on the market. You need to learn how to catch trends in the market. That's the number one thing. As a technician, catch trends, not trades. Catch trends, not trades. It'll change your life. But yeah, don't forego you 20, 30 years from now because you see something for yourself today. Always think about where you're going 20, 30 years from now. Make sure those actions you're taking today are getting you to where you want to go.
So good. Okay, I'm literally having to hold my tongue to not ask you technical questions. So I'm just going to have to say you have to come back. You have to come back.
We have a risk there because if we start embracing the technical side, this is another hour and a half, 2 hours.
Yes. Yeah.
Although I will come back because I do love those technical conversations. And this has been so fun, Becky. Like I love being on this podcast. I just want to say thank you for having me on.
Well, thank you for joining me, Matt. Like every time that I have been around you in the world of trading, I have really enjoyed learning from you and trading with you alongside you. And so thank you for being my guest. And I'm going to hold you to that. Like you're going to be back in a couple months and we're going to dig into some of your favorite technicals.
That is a beautiful, beautiful thing.
Okay, thank you guys so much for your time. And Coach Matt has, his own coaching system, and then he also is a coach with me at BluSky. And so I'm going to link all that in the description so you can ask more questions of both of us and go where you want with this, because I am all about bringing resources and great conversations to market mamas, and I think this episode killed it for that. Just saying.
Loved it too.
Perfect. All right, happy trading, everyone. Take care.